Okay, so hello everyone. This is 2017 June 6. Okay, and this is Jack's webinar. And welcome all of you join tonight's live webinar, and I'm going to cover on the markets. All right, so let's first of all let's look at the DXY, the dollar index. Okay, the dollar index has been breaking down the previous lows, okay, the neckline, and then it always comes make a lower low, okay. The pullback isn't strong enough, so it actually maintained the previous downtrend. The downtrend is quite obviously, okay, still in the downtrend. So, and although it actually drops a lot, but don't assume that it will pulls back very quickly or very fast, because it has the chance to test the previous low like 95.50 or maybe the bottom of the pin 95.90. Okay, but there is an important level for you guys to watch, okay, which will be the 96.44, this level. And look at this level, it's actually a 0.618 pullback, and it actually also previously these bottoms or these structures. You can see this potential neckline here, okay. The price went up of this structural pullback and then all the way goes up. So this level actually do make some sense. So while the DXY is approaching this supporting level, we don't assume that, or I don't ask you guys to still to short. Okay, don't short at a low place. If you want to short, find a pullback. Maybe the best time to short the DXY will be 98.47, this level. Okay, wait for the pullback to here and then short, you will have a very good return because you are selling high. Okay, don't sell low. Okay, if you sell here, what if it pulls back to 98.40? You will be suffering. Okay, so we don't want to short when the price is in a very low location or is hitting into the previous support. That's why we don't want to short. Okay, so focus on selling high, and of course there's nothing very bullish right now. There's no bullish setup. Okay, don't buy it as well. If you only want to buy, you may consider to use a smaller time frame. For example, here we can see that this is a level that the DXY makes a lower low, right? It makes a lower low here, okay, and then the price goes up, breaking this level, and then comes down again. So it actually retests of the previous structure here. Here has a little structure that works as resistance before. All right, you can see here, price bounce back and reject at 96.61, another rejection, and then boom, it flies. So it pulls back to the same level, and now it's come back again. So the important thing is, I will only consider to long DXY when it breaks this trend line, when it breaks this downtrend pressure, okay, and no longer making lower lows, okay. This wedge will be the number one thing that you need to watch out. So if you see a breakout here happens, okay, the best thing is it can break up to 97 and then pulls back to the neckline here, and then you find some opportunities to buy. Only when you see this kind of pattern then you trade. Understand? If you understand, please reply me. Okay, reply me here if you understand. All right. It will be very important. Don't buy in a downtrend until you see the downtrend is broken, or until you find a very good place, a very low location, value investing, okay, or maybe important Fibonacci levels like 0.618, 1.618 extra, okay. Unless you are super confident or your risk control is very good, okay. And similar, let's go to euro dollar. Okay, the euro dollar, we found a very bullish bar here, and that's why I write in the trading view. Okay, I write in the trading view how to read language of the market, okay, we can see a very bullish candle goes up and breaks the previous high here, right? Breaks the 1.12566, and this breakout, break, retest. So after the non-farm payroll, if you are watching the market and you see some candle like this, okay, break out, pulls back, and stand above the previous high, these are the buying opportunities. Okay, easily you can get the returns of the previous high here. Okay, and then we see here, okay, another bearish candle comes in and make the price push below the 1.1260 as well again. All right, so basically it means that the previously supporting structure is now become resistance. Okay, I don't know what drives the euro to to break down, but since it breaks down, we know that there are a lot of selling pressure from here, and that's why you can see the pink bar here, the rejection. It goes up again, but eventually it still boom, it still shoots up, shoots back. Okay, and now today you can see this structure 1.1276. All right, and guys, this kind of formation is this kind of formation is a topping formation, right? Do you remember? I think last week I mentioned that the tuning fork, you still remember? This kind of, this is a bullish, right? Another one is a bearish, right? If you see this kind of bearish candle like this is up, the sideways, and breaks down, breaks the previous, this doji, okay? So this is a topping formation. So you can actually consider short euro because it actually doesn't fail to break the previous high and reject it at this neckline, all right? So if you want to short euro, you can short now and it just stop loss above 1.1279. Maybe I will put a 1.1285, okay, to be above the previous high. So that is about 20 pips, risk, right? So in the downside, you actually looking for target to 1.1240 first, then 1.1200, and then 1.1120. Okay, you just move down, because the euro dollar has been broken this trend line already. Okay, this trend line was broken, and now it's broken and retest, right? Broken and retest. So if the retest is successful, which means it doesn't break new high, the euro will go down. Okay, this is what I feel for the euro, right? Of course, if you trade here in stop loss above previous high, if the bullish bar appears, take away the stop loss, you just exit the trade. Okay? Remember to calculate the loss size. Okay, so typically for 20 pips stop loss, if you don't want to lose $200, how many loss you can trade, David? Say you trade here 1.1265, your stop loss 1.1285, that is 20 pips stop loss, right? So 20 pips stop loss and you don't want to lose $200. Now, my question is already very simple, right? So 20 pips stop loss and the risk is $200. Right, very simple, just use $200 divided by 20, which means $10. 10 USD per pip, right? So remember, if you trade one lot means 10 USD per pip. Okay, so 10 equals 10, which means you just trade one lot, right? Yeah, correct, one lot. So you trade one lot, stop loss are here, and you can take partial profit here, take partial profit here, and then have another good one all the way down, right? So this is a potential setup for the euro dollar. Okay, of course, if the euro can break 1.1240, that will be even better. Okay, maybe you can consider to wait for the euro to break 1.1240 and then trade a short. That will be safer because it tells you that euro will break a lower low, right? Because right now it doesn't still have a higher lows. It still is higher lows. If the euro can break down break down the lower low, it will confirm the bearish trend. So you can also choose to wait for the euro to break down this level, pulls back, okay, cannot go higher, and then you short from this pullback, and then you take a short from here, all right? That will be a better or so-called more confirmed idea, right? But you have to wait. But sometimes maybe the drop will be very, very huge, and even if it maybe break this period, and it's hard for you to find a pullback. Okay, that's the downside for this trade. Okay, if you enter now, you get a little bit risky, but you have a good price level. Right? If you wait for the breakdown, you may lose a good entry point. Right? Okay, and for the sterling, let's see. Okay, let me just check how many of you guys short sterling from 1.2940. Raise your hand. Because this one I published on Sunday, right? I published on Sunday. It's actually a quite typical classical pattern. It's a breakdown the uptrend, pulls back to the 618, and also the structure here cannot go any higher than you find a short from 1.2940, right? So it's also a good trade, right? Right now it's in a proper, maybe in the almost in 60 pips swing. And when the price goes down to 1.2875, you should take some profit, because here this is origin of the bullish move. You should take some profit here, and you can choose to hold another one all the way to 1.2780 and even lower. In the long term wise, I will think the sterling may goes to 1.2580, okay, because that will be the origin of this bullish move and also the previous high. So you use the structure here to as your profit taking point, okay, for this sterling trade, okay. And of course, how you can confirm that it's going down, you just need to wait for the channel to be broken, right? Just wait for the channel to be broken. Wow, okay, that will be good. That will be good. Okay, 1.2930. Well, that's good. Okay. Of course, if you missed the entry, you can always wait for pullback to sell, right? So if you want to sell the pullback, you just go to the 30-minute charts, and where is the best place to sell is here. Do you see that? The price have support 1.291, and then breaks down and retest. Okay, so these two pin bars is your shorting opportunities, right? Of course, if the price goes up again, and you see the price action, can still sell. Because right now 1.29 is become a resistance, right? You see that support here, breaks down, retest, and so 1.29 is become a very good resistance. So if you short 1.29, your stop loss should be above 1.2950. Yeah, can also wait for 2618. That would be a very good choice. Okay, 2618 will tells you that R goes back to 1.2919. Okay. Okay, let's go to gold. Okay, a lot of people ask me, well, can we short gold right now? I say gold is actually making a very, very bullish move, all right, and no pullback, and all it goes up, and we're testing the previous high. Not yet, 1.295 is still the resistance level. Okay, so you just mark this level, all right, but it's kind of having a shooting star right now, but this forward candle is not closed yet. So you go to 30-minute charts, you can see that remember I teach you guys how to use RSI, right? Still remember in our 11 video, our course video. Jamie, David, all of you should have already completed the course of the RSI, right? So RSI, you can see here there is a bearish divergence from the RSI, because you can see the RSI is going down, making a lower high, price is making a higher high, right? So this kind of bearish divergence is kind of a signal that the gold may have a turning point from this level. But tell me, if the RSI is above 60 or not? Is the RSI above 60? Yeah? Answer me. Yes. So since RSI is above 60, it just means it's so bullish, right? But there is a bearish divergence, just like previously. Divergence also not going to work if the RSI is too bullish. You see, it really divergence but drops. RSI all the way comes down to 40, but the price didn't really come down a lot. Which means if you're short, you should take a quick profit when hitting the previous structure. Okay, right now the gold structure is here. You can see here, this is how we enter the market, right? Price making high, reject once, become resistance, it breaks up. So you find a point to buy the pullback 1278. Okay, you can always find a pullback to buy the structure, pullback and buy from here, and then you can all the way enjoy this 100 pips. Right now, the RSI is still very, very bullish. Okay, I will rather wait for the RSI to come down and retest and short from here, from this level. And what will be the price movement? The price may potentially, since RSI can break 60, I need the candle to, a bearish candle to at least go back to 1288. I need to see a bearish candle to go back closed at 1288, and then pulls back again to the 1293 to make a potential double top, and then you check the RSI at this point. You get it? Do you get it? This is how you anticipate the market. How you anticipate the market. Okay. Wait for the price to making a to have a very big drop. Make those people who chasing the price higher feel stressed, right? And then price may pulls back again to test the high a second time. And if that time the RSI is at 60 or below 60, then it's very good time for you to short. Okay. I just give you an example, right? Look here, guys. Do you get what I mean? You see, the price is very bullish. It breaks the previous high here, and RSI goes up. Right, RSI is at a 60, above at 80, above, very bullish. So at this point, you don't short. If you short here, you sure be stop loss, because if you put a stop loss above this pivot, you will stop out, right? Because the RSI is too bullish, and then you wait for RSI to come down to 60. Below 60 again, which actually happens in this candle. In this candle, the RSI pulls back and the RSI goes below 60, and then the price is to wait for the pullback. Where does it pull back to? Structure, right? The same structure here. You can see this support now become resistance. So the best shorting opportunity comes at here. When it pulls back to the structure and the RSI didn't go cross 60 and you enter short here, put your stop loss above the previous high, okay, and you see what happens next. See here, the price, it just moves down quickly. It doesn't like before, it has hesitated to move down, right? And you can see, okay, wow, boom, here. After this candle, it hits to the previous, this structure or this neckline here, you should take profit and already give you a 1-to-2 risk reward ratio. Isn't it? It give you a risk reward ratio of 1-to-2, right? So this is something I want you guys to learn. Okay? Reply me if you get it. Especially for those new friends here, maybe this is the first time that you are learn from the RSIs here. This theory is very, very useful. It's help you to filter a lot of trade that will keep hunting your stop loss. Okay. Hey, give me some feedback. Only David knows. Okay. So here, same thing will happen. Okay, same thing we are expecting, right? So I will wait for the RSI to below 60, pulls back, and see whether it tests the previous very good structure, make a second attempt of buying high, but fail to break a new high, then you're short. The stop loss is above the previous high. That would be the best situation, okay? All right, so don't short for right now. Wait for the double top. Wait for the RSI to retest the 60, below 60. Okay. All right, let's go to oil. Okay, for the oil, let me just do a quick review that how many of you guys short oil from 51? Who short from 51? I think I mentioned this in my QQ group, right? I say, yeah, this is the best way that you see the you see here. Also, the RSI confirms very bearish candle, put RSI below 60, and then pull back to the structure here. You see here, the RSI is no longer above 60, so you can short from here. Boom, 300 pips. And then next time here, 50.224, you can short again. And then the third entry is about this at the 49 level, this level. This level is also a very good short. Look at the RSI, it didn't really cross 60, right? Okay, so here is the best shorting opportunities. Right now, the oil is find some support at 46, but let me ask you, do you think this support is good or not? Do you think this support is good or not? Tell me your idea. It is not very good support because we don't see very good price action from here. You can just see the bounce, just as bounce, right? But it didn't have a very bullish candle to break the previous downtrend. Failed to break still not breaking the downtrend yet. So this level maybe it's just a temporary support, but it may break. It may break, yes. So you can anticipate the price. If the price breaks down, find a pullback to short it again. Okay, that is a very good chance to short oil. Yeah. Okay, so find a pullback to short oil if this support is violated. Okay, and the previous downtrend still remains. Okay, long-term wise, look at the daily chart. The oil is obviously breaking the previous support, right? You can see here the uptrend. The uptrend is finished. This uptrend is definitely finished and making lower highs and lower lows. So I will feel that the oil may continue to go down and break 44 and all the way to 40. So this is a 40 is maybe have some support here at a 40 or 39.92. Okay, so still hold your short all the way to here. All right. Okay, let's go to dollar yen. Okay, for the dollar yen, we do have a loss trade in last week, but the loss trade actually in the beginning we actually win almost 200 pips from 110.50 to 112.20. Okay, and the second time it comes to the 110.50, another 100 pips. Okay, made two waves of long, and then the third time we buy, we are stop out for about 50 pip loss. Okay, but since it is a breakout, you have to exit the trade. Okay, you shouldn't actually hold the dollar yen long trade since the 110.30 is broken. Okay, so you can see here, if you don't stop loss here, you will suffer more. Okay, however, for the dollar yen, pay attention to the gap. Okay, there's a gap here. So a gap is actually tells you that it's very, very out of balance. Okay, the buy and the sell force is at an extreme imbalance. Okay, so people want to still got people sell, and the next day it jumps up, gaps up, make those sellers pain. Okay, and didn't really fill the gap. So this time, I will feel that the dollar yen will fill the gap. Okay, it actually did. It did fill the gap. You see here. So you can see a bounce from here. All right, so 109.30 will be a support, and if you want to buy, your stop loss should be below 108.85, and right now it's 109.50, which means it's actually 70 pips risk range, but I will feel that it's too big, too wide, and also the RSI is below 40, which means it's very, very bearish. Don't buy here. Okay, yeah. Correct. If the candle want to fill the gap, the best is to come to this this place 109 level, 109 level closing price. Yeah, okay, but it actually tested the previous week. Okay, so you can see the whole area is still in the control. The sellers are quite cautious to short in at this level. Of course, the best way for the dollar yen trade is actually wait for the pullback to 110.35 and short. So wait for the price to come here and short. Okay, that will be the best idea, because this level is a broken structure. Pullback and short, you may have another, I think another 100 pips. Okay. Alternatively, you can wait for the downtrend to be finished, but that will take a long time. We assume that the dollar yen will have some support at 109. So you have to wait for the price to to sideways, then maybe even a breakdown, then boom, it breaks up. So once it breaks up the downtrend line, you find a pullback to short. Okay. Oh, sorry, you find a pullback to buy again. Okay, only at here when it breaks down the downtrend, then you can to buy. Otherwise, you don't really buy. Yes, there will be a potential ABCD pattern. There'll be a in 10 testing 108. However, in the daily chart, what I feel is the dollar yen is making a big triangle. Okay, it's very big triangle here. Okay, sorry. If I make this, it looks like the triangle is broken. Looks like it's broken, right? But since this candle doesn't really close yet, we will see the daily candle closing price. If it closes below this trend line, it actually tells you dollar yen still goes down. It goes down. Okay, we may go back to here, 105.97. May go back to this neckline here. Okay, so don't buy dollar yen. If you want to sell from 110.30. Okay. Do you have any divergence book or something? I know divergence, there isn't any book, but you can just search it in Investopedia. You can just search, Google search bearish divergence or bullish divergence. Yeah, plenty of articles for you to read. It's actually a indicator and tells you about conflicts. Yeah, but the indicator doesn't. It's not the key. The key is still about the price actions, about the location. Okay, so location wise, you see here, that is the best part when you short dollar yen. Okay, and when the dollar yen comes into low location at 106, you'll be good to buy. Okay, buy low, sell high. That's still the best strategy. Can you simple join to Projack? Yeah, David, you're right. You can just join Projack's students group. You learn everything, because in my all of my students will learn all the course from me, and right now we are having it's already 12 videos. Okay, 12 videos that it's actually almost about 16 hours or 20 hours learning. Okay? You can see from the here, price movement, structure, trend, Fibonacci retracement extension, ESP2618, ABCD, Gardy pattern, bat butterfly, RSI, cipher, and combination. Okay, price action, on time frame, buy size. It's a lot of things that you can learn to trade in a professional way. Okay. Yeah, you're right. Break the triangle, can short in the retest or broken more trend. Yes, you're right. So I will feel if you want to short dollar yen, you'll find a pullback to 10.30. This level would be a very good place to short. Okay. All right, go to S&P. S&P, I will feel is keeps going higher, right? And it just broke the recent highs about 2,400, right? So things 2,400 is broken, all right? It's still bullish. However, it may have some retracement all the way to test 2004 again. And also here there is a potential Fibonacci extension. I will use this one to measure the extreme extension. You may go to 2456.40. Okay, so this will be a potential patterns for the S&P. Okay, and also ABCD pattern is going to complete. Okay, so ABCD tells you, yeah, it complete already. Okay, the ABCD pattern complete 1.272 to 1.414 extension. So it will tell you the S&P may goes down. Okay, however, there is condition. Okay, what is condition? The condition is it has to break the uptrend line. Okay, it has to break this uptrend line. Once you see a broken up this trend line, pull back to the structure, you can short. You can short, all right? That's the way you short. And remember to check the RSI. Okay, check the RSI before you short. Okay. Yeah. Okay, that's about S&P. So let's go to Aussie dollar. Okay, Aussie dollar today is very bullish and it breaks 7510. So I think previously we shot from here. Okay, we have a good return. And I said in my trading view, put your stop loss at 0.7480, right? So it actually hit the protective stop loss. Okay. Yeah. And right now the Aussie comes back to 0.75 again. And here, since this is third time test, I will not recommend you guys to short it again because the selling pressure may become weak now because it has been tested too many times and those selling orders are gone. Okay? Yeah, I know, Jamie. Yeah, I know you showed all the previously from here to here, right? Yeah, it's good. And focus on the price action first, right? Looks bullish, but if the cannot close above 05.17, it makes trouble. It actually tells you the equal high. Okay, then mark this level. Okay. If the Aussie cannot close above this level, you find a buyer failure to short. Okay, find a buyer failure to short. And right now the RSI is above 60, right? So if you want to short, make sure that the RSI is below 60. Okay. Short with a cipher, right? Okay. I think if you short from the cipher, your stop loss should be above this up high. So maybe your stop loss should be 0.7520, maybe. Okay. Okay. To be honest, the Aussie may have become a double bottom right now. Okay, because as you can see here, this is the first bottom, this is the second bottom, right? And breaks if the breaks the neckline, it goes all the way up. Okay, it goes all the way up, maybe to 0.77. Okay, that's very possible. That's very possible. Okay, so watch for the price action over this range 0.7110 to 0.7520. Okay. Yeah. Close about. Okay. You move the stop loss to above 16 minutes bearish pin bar, also triple top. Yeah. In the 1 hour, you see here. Yeah, you move the stop loss above here, right? Yeah. And now it just hits the previous high. Okay. Alternatively, you can consider to buy the Aussie when it pulls back to 0.7450, this level. Okay, this structure is actually tells you a lot of buyer here. Okay, pulls back here, you can buy. Okay, that's for the Aussie. Okay, for the Kiwi, let's see here. The Kiwi dollar is making a very strong move. Okay, all the way from 0.68 to 0.71. We tried to short the Kiwi once. Yeah, we short the Kiwi once from here, and it stop out. No, it's actually take some profit and then stop out here. Okay, hit the break even stop loss. Okay, and then it just keeps going up, keeps going up, keeps going up. Even there's a pin bar here and goes down a little bit, and then due to the non-farm payroll, it still goes up. And it's, Monday, it actually gaps down. Fill the gap, there's potential shorting opportunities you can find from here. And yesterday, I think David actually catch a butterfly pattern from here. Also make some pips, which is good. Okay, which is good. Make some profits. And I mentioned to you that you should take some profit because it has already completed the second target, right? Yeah, hit the second target, 0.7127. So totally you earn about 23 pips. And right now the Kiwi is testing the 0.72 level. Okay, look at the daily chart. It actually goes to this structure here. This is actually an original move of this downtrend. So you can assume that there are buyers from 0.7188 to 0.7247 previously. Here have some support, buying, and then breaks down. Now it actually retests this same structure. The price may turn from here, but the RSI is of course about 60, so there's no way for you to short. Okay, yeah, I don't want you guys to short right now for the Kiwi because still very, very bullish. It may goes up to 0.7240. But in the 30-minute charts, of course, it's actually in the uptrend channel. Okay, in the uptrend channel, but there's no significant bearish candle yet. You can wait for a bearish candle to break this trend and then find a pullback to short. Okay, that's possible. Okay, but you need to see this bearish candle. Okay, we need to find a bearish candle to close below this trend channel and then find a pullback to short. Okay, right now don't short Kiwi because it is so bullish. You see, it's very, very bullish. Just the price reluctant to come down. It comes down, it just shoots back. Comes down, it just shoots back. Right. And also in the daily chart, it has already break the 618 level. So it tells you it may go to 0.76. Unless you see a double top here, then you consider short. Otherwise, you don't short. Okay. All right. Okay. So let's go to dollar CAD. Canadian dollar, right? So Canadian dollar, very strong support from 1.34 I mentioned, okay? So right now it actually goes up and pulls back. So potentially a 618 level will be what you're looking for, okay? So you can see here 1.3447 is a very good support, right? But you don't want to really long from here because there isn't a double bottom. I will wait for the price action to be confirmed when it breaks the downtrend line, this downtrend line. Okay, after the breaking out the trend line, final pullback to buy the dollar CAD. Otherwise, you just wait for the consolidation to be complete first. Okay. All right. So yeah, I think that's all for today. Any other questions? Any other questions? If gold, okay, gold. Okay, let me just make a review of gold. Okay, so gold is actually having you see kind of a bearish divergence from here, okay, but not yet a bearish signal occurs yet. So wait for the price to further comes down to test 1288. At 1288, you may find place to buy, and price may second and shoots up, okay, and may goes up to 1293 again and short to a pullback. Okay, for the gold, short the second attempt of making high but failed. Okay, short it. You can do so. You can do so. Aussie Kiwi. Okay, Aussie Kiwi are what I feel is the bad pattern still works. Okay, so from 1.0405 it's good to buy the Aussie Kiwi, and the price did the price did break the downtrend line. Okay, did break the downtrend line, so find a pullback to buy. Okay, and right now it has already tested the 618 level, so it's good to buy the Aussie Kiwi at 1.0430. It's good to buy. Okay. 1.618 stop, spot to stop. You mean the 618 level for this AB left? Are you telling me this 1.61 extension? Let me just measure it. Okay, so from here, yeah, 1.618 here, 1.0418. Okay, so if you want to buy the Aussie Kiwi, I think the stop loss should be 1.0370. Okay, 1.0370. Okay, you are good. Yeah. Euro Kiwi, you're holding till gap. You mean you are short Euro Kiwi, right? Yes, nice shot from Euro Kiwi. Euro Kiwi is going down to, yeah, here. Maybe here first, the neckline first. Yeah, nice shot for Euro Kiwi. It's actually a very good shot. You see the structure play here, right? Have kind of support, breaks down, pulls back. So this is the best time for you to short. Okay, this is the best time for you to short. It just works very nicely. And Euro Kiwi, the uptrend is broken. The uptrend is broken. Okay. Yes. Congratulations, David. Yeah. Give yourself a cross because you did a good job of taking this Euro Kiwi short. All right. Okay, so I think that's all for today. I hopefully you guys enjoyed what I shared for this market, and focus on train your eyes to trade what you see, to see what happened and what is your anticipation, and draw the lines correctly, make your analysis according to the market language, okay, according to the everything that you learned, pin bar, the structure, the 618, the harmonic patterns, okay, all the combinations, okay. And I do wish you guys great success in trading. And don't forget, you can always learn my course from harmonicasia.com, right? So here you can just go to the Pro Trader course, okay? You can just sign up here from this level, okay? To learn all the 6 skills, these 6 abilities, 6 skills, okay? How to understand how the market moves, buy low, sell high, profitable patterns, okay, how to determine stop loss and profit taking level, plan your trade your plan, okay, trade smartly and efficiently, right? Just like what we did in the WhatsApp students group, right? We have a very powerful students group that every day the traders are just, sharing ideas here, okay? And especially, one of the special thanks for Wei Chong, okay? Because Wei Chong did a very good job that they translate all the Chinese webinars for English for the other students. All right, thank you, Rachel. And recently I'm in Singapore, so if you guys want to come to visit me, please let me know. Okay, you can come to my home to spend the afternoon with me. Let's just trade together or whatever. All right. Okay. See you there. Yeah. Plan your trade and trade your plan. My name is Jack, and I'll talk to you soon. Bye bye.